Why it's not always about identifying whether a market's in a bull market or a bear market. It could be about identifying if we're in a two-way market. And we'll go to the charts to look at the E-mini Russell, NASDAQ, Dow, and S&P. Let me take you to this week's NinjaTrader Charting Edge. I'm going to go over all four of the major indices, the Russell, the NASDAQ, the Dow, and the S&P, because I think it's so important to look at all of the indices together on the same type of chart to identify the trading environment. Like I said in my intro, it's not always about finding a bull market or a bear market. As traders, we also have to identify if it's a two-way market. And before I get to all of these charts today, my opinion is that the market is in a two-way market. Neither the bulls nor the bears have control. First off, I'm going to pull up a E-mini Russell 2000 daily chart. All of the indicators are going to be the same on each and every chart. I think that's extremely important. 20 period, 3 standard deviation Bollinger Bands. Red is the 200-day moving average, and that gold moving average right there is just a 20-day moving average. The reason why I put the 200-day and the 20 is because you have a short to medium time frame and you have a longer term time frame. So for me, I think it's important to see where we are in relation to two major moving averages. Now, first off, when you look here at the Russell, I talk about this all the time. When the Bollinger Bands are open and we're below, I usually talk about the 10-day moving average, and we're below it and that mouth is open, that to me is a bias of direction. Once the mouth of those Bollinger Bands closes, we are really boxed in. That's really my number one indication of trend. So now we're boxed in, as you can see, from this earlier sell-off in the year, we are now really boxed in inside that Bollinger Band, and we're just sitting here right around the 20-day moving average, which is really just the monthly moving average, about 20 trading days per month. Below the 200-day moving average, many would say that that indicates bearishness, and it does. Obviously, we're lower on the year, but as of right now, the current conditions, just chopping around the 20-day moving average, with the Bollinger Bands really just flat to choppy. And you know I like clean Bollinger Bands, and we just don't have a clear move. So it tells me right now, just by looking at the Russell chart, we're just sideways. Neither the bulls nor the bears have control. Let's go to the next chart. Here we are at the E-mini S&P 500 daily chart. Looks a little different than the Russell, but there are some similarities. We're both below the 200-day moving average, not nearly as much in the E-mini S&P, but right around that 20-day moving average. And when you look at the Bollinger Bands, flat to choppy, we're just really in the same Bollinger Bands we've been in for the past 6 months. What does that indicate to me? Just sideways action. No one is in control. Neither the bulls nor the bears are in control. And you can even see how we've been trading around that longer term moving average, the 200-day moving average, really getting those longer term big picture traders really chopped up and really unsure of primary trend. Just another confirmation to me that we're in a two-way market. Let's go to the next chart. Here we are at the E-mini Dow chart, same indicators as the other charts. And what do we have here? Right around the 20-day moving average, Bollinger Bands choppy, nothing clean about this at all. Same Bollinger Band peaks really going back 6 months, very similar to E-mini S&P and Russell. Below the 200-day moving average, not as much as the Russell, about the same as the E-mini S&P. But what does this once again confirm to me when you look at all the major indices that we've been looking at so far? Really just sitting in the middle of the peaks of the Bollinger Bands and right around that 20-day moving average. Two-way market. Let's go to the next chart. Here we are at the E-mini NASDAQ 100 futures chart. I say this one for last because they are really the weakest market. They have been the one really leading the downside. Russell has been pretty weak as well. They're the two weakest of the major four. As you can see, the E-mini NASDAQ is below its 20-day. Bottom Bollinger Band is actually making a lower low. NASDAQ continues to really trend lower and really couldn't hold at all above the 200-day moving average. So one thing that I will say, even though this chart does look very similar to the E-mini NASDAQ, Dow, and Russell, the NASDAQ is the weaker one. Still sitting around the 20-day moving average, but the Bollinger Bands have been trending lower. I like to look at that because to me, it's better than just looking at the tape. I like to see what the Bollinger Bands are doing. They are choppy. We are seeing a lot of sideways action. I definitely still think that the NASDAQ is confirming that we're a two-way trade. But something that I will look at going forward is if we start to make lows, what does that do to the other indices? So I like to look at the indices as a whole. And when you have a leader to the upside or to the downside, if it starts to make lows, does that change us from a two-way trade to a bearish trade? I would like to see what happens. But until that happens, just another confirmation to me, we are in a two-way traded market. Micro copper futures are coming to CME Group on May 2nd. They'll be 1/10 the size of one benchmark copper futures contract. The symbol will be MHG. To learn more, go to cmegroup.com. To talk about why I believe it's so important to identify if we are in a two-way trade, I put this tweet out this past week. This week, I had a lot of winners that I covered for losers. Subconsciously, I was looking for home runs in a market I know is a two-way trade. It wasn't my strategy, I just executed poorly. Be honest with yourself about the mistakes you make. Acceptance is the path to fixing them. So first off, I talk about how subconsciously I was looking for home runs. I had some winners that went my way right away, and when I looked at it, in that moment, I thought, wow, this thing could really go. What happened? The market came back to my prices, and even worse, and I covered for losers instead of taking profits in a market that I know is a two-way trade. My big picture homework knows it's a two-way trade. That didn't translate into my intraday or multi-day swing trading. I admit it, I got a little bit greedy and I got away from what my bigger picture homework told me. And that could happen because we are coming out of a time where at the beginning of this year, the Bears were in control. Over the past several years, the Bulls were in control. And when we transition from different environments, subconsciously it's hard because you get a winning trade that's going your way. You think you should be holding it and you don't, and this is what happens. This is why I say it's so important. Don't get caught up in always thinking bull trend or bear trend. That will really help you with your execution intraday or even multi-day or even longer than multi-day position trading, because in your mind, you know what your big picture homework is telling you, and that is extremely important. Lastly, I talk about acceptance is the path to fixing them. I knew after I did what I did wrong. I accepted it. So now subconsciously, instead of looking for those home runs, I have committed to knowing it's a two-way trade, and my trading has gotten better. I'm not looking for those bigger hits. I am not looking just for base hits because we are in a two-way trade. Traders, I want to hear from you. I think that the major indices are in a two-way trade. Do you think the major indices are going back to a bull market, or are we in a bear market? Let me know in the comments down below. Never miss an episode of Develop Your Edge. Click that subscribe button right there. You could also DM me on Twitter at Anthony Crudele. Don't forget to check out Instagram, Anthony C. Crudele. That's a wrap for today. See you next week.